Hi, hello, welcome to our channel. In this video we are going to discuss about value of supply, and this section in this chapter we are discuss one section and some rules. First of all, we want to know about the agent. Agent means a person who includes factor, brokers, commission agent, arrehatia, del credit agent, actionnaire, mercantile agents who carries on business of supply of goods or services on behalf of another person. Who is carrying the business on behalf of other person, he is known as agent. Next, consideration. What is meant by consideration? Consideration means payment in money or otherwise for the supply. Here it involves a payment in money or otherwise, maybe in kind also. And monetary value of any act or forbearance of supply. There is a supply. For that supply you are using some monetary values by the recipient or any other person. He may pay for any person or the recipient who is receiving the service. So the amount is deposited to the consideration as payment, as considerations, and only when the supplier such deposit as consideration for the supply. But if the amount is in the nature of subsidy, it will exclude from central government or state government. If it is a subsidy from central government or state government, you must exclude. And from you received that subsidy from other NGOs or other companies, if it is price linked subsidy, then it must be included. If it not linked subsidy, it will be excluded from the definition. Next, family means what, goods means what, market value means what. Here market value means full amount which a recipient is required to pay, that is market value, to obtain goods or services. He may be likened in quality or about the same time or at the commercial level where the recipient and the supplier are not related persons. Here market value means there must be mainly two conditions. They are not a relative person and they are not the price must be a sole consideration. Next, here persons include, who is the persons will include all of this. Next, money means what? Money includes anything. It is Indian legal tender, foreign currency, checks, promissory note, bills of exchange, letter of credit, draft, pay order, traveler check, money order, postal, electronic remittance, any other instruments recognized by RBI when used as a consideration to settle an obligation or exchange with Indian legal tender or other denomination. It must exclude some currency held as numeristic value. Next, what is the section 15 discuss? Section 15 discuss about valuation rules. Section 15 discuss about valuation of rules. That is value of supply. Value of supply is equal to, first section 15.1 will be value of supply is equal to transaction value. What is meant by transaction value? Transaction value means when a transaction of a consideration are received between two persons, the two person must be not a related person and price must be sole consideration. This is section 15.1 discuss. Here value of supply is equal to transaction value. What is meant by transaction value? Transaction value means supply made to unrelated person where price is the sole consideration. If you transfer some goods to unrelated person, what amount you receive, that is the transaction value as per section 15.1. Here transaction value is equal to supply is between unrelated person, price is the sole consideration on the supply. Value of supply of B will be the sole transaction value. Here related persons means section 15 covers where situation of controls including sole agents, sole distributors or sole concessionaires. The concept of related person has been presented by way of diagramics in ancient prayer. Here they are telling who is the related person. Why this related person? Because for transaction value there must be an unrelated persons. And price sole consideration. Price is sole consideration. So if you know the unrelated person, first you know the related person. Who is the related persons? Persons includes legal persons deemed as related persons. If some person is a legal person to you, he also deemed as related persons. Related persons if such person or officers, director of one other business. So officer or director of business or such person are legally recognized partners in business. Legally recognized partners, or such person are employer and employee. There is a employer-employee relationship, then their persons treated as relatives. Next, any third person controls directly or indirectly or holds owns greater than 25% voting stock or shares of them, that is associated persons. One of them controls directly or indirectly the others. It is also known as related persons. Next, third person is controlling directly and indirectly by the both of them. Next, such person together controls a third person, or such person are member of same family, or one of them of sole agent or sole distributor or sole concession of others. So these all are related persons. Why we discuss about related person? Because transaction value means there must be unrelated person and price must be a sole consideration. For example, they are providing one example. Mrs. Priya holds 30% share of ABC Limited. 30% he is holding 30% shareholding. Okay, 35% of XYZ. So 30% in ABC company, 35% in XYZ Limited. ABC Limited and XYZ Limited both are related persons because same person is holding associated enterprise. So they are both are treated as related persons. Next, Q Limited has deciding role. Q Limited is deciding role in corporate policy, operations and management and quality controls of R Limited. It can be said that Q Limited controls R Limited. So the Q Limited and R Limited are both are related. Next, Alpha Limited controls the composition of board of directors of Beta Limited and Gamma Limited. It is said to control both Beta and Gamma Limited. Beta and Gamma are related person. One person is controlling for other. They both are included as related parties. Next, Beta Limited and Geta Limited together control Margita Limited. So Beta Limited and Geta Limited are related persons. Both are related persons. Next, the price actually paid or payable. Price are paid or payable must be set supply of goods or services. Must be where sole consideration means what? What mean by sole consideration? Sole consideration means the price actually paid or payable for the said supply of goods or services or both. So here are the price. Here one example. Wholesale price for 1 MT of cement sold by X Limited in ordinary course of business, it will be 7,000. Price of 1 MT of cement sold by X Limited to an unrelated customer Y 700. Okay. Next, due to 7,000, and price of 1 MT of cement sold by X Limited to an unrelated customer will be 6,700. Ordinary course he is selling to 7,000 and he has sold that unrelated customer 6,700. Value of supply made by X Limited to Y is 6,700, which is the price actually paid or payable and not the wholesale price. Wholesale price will be 7,000, but he is selling only 6,700. But here there must be a unrelated person. So unrelated person and price will be sole consideration. Next, the value of taxable supply of goods and services shall be ordinarily be transaction value, which is the price paid or payable when the parties are not related parties. So when there is parties are not related, then that price will be treated as price consideration, sole consideration, and the price is the sole consideration. Section 15 of the CGST Act further elaborate various inclusions and exclusions from the ambit of transaction value. For example, the transaction value shall not include refundable deposit discount allowed subject to certain conditions. So as per section 15, transaction value not include refundable deposits and discounts allowed subject to certain conditions. Next, inclusion in value. Section 15.2. What is there in section 15.2? Section 15.2 deals that taxes. What are the taxes? CGST, SGST, whatever the taxes are. All taxes will be included, but other than GST taxes, remaining all taxes will be added. Taxes, duties, fees, charges other than CGST, SGST, UGST, GST compensation will be excluded. Next, third party payments made by recipient in relation to supply, which supplier will be liable to pay and were not included in the price. So section 15 to what is discussing, when the person is liable by the supplier, when the person is liable by the supplier and the payment was made by the recipient, that price also treated as inclusions, because it is also included in price. If it is not included in price, you must add to the price. Next, incidental expenses such as commission and package charges by supplier to the recipient of supplier, it is also included in the price of the invoice. Incidental expenses may be include anything done by the supplier in respect of supply till delivery of goods, supply of services which is charged to the recipient. Next, subsidies directly linked to price of supply other than ones given by the central government or state government. Subsidies, whatever the subsidies, if it is linked to the price, linked to the price of supply, then it will be included. But if it is linked to the supply, even though linked but it is given by the central government or state government, it will not be included. Next, the above elements are given below. Same example. One example first, Grand Bridge contract with ABC company to conduct a dealers meet in furtherance of this Grand Bridge contract with vendors to deliver goods and services like water, soft drink, audio systems, catering, flowers, etc. at a venue of the stipulated date at a stipulated price. Grand Bridge is liable to make this payment as contracted. Next, the soft drink, whatever the soft drink supplier want payment upon delivery of ABC company agrees to pay the bill raised by soft drinks vendor on Grand Bridge and receiving the crate of soft drinks. Here, Grand Bridge is a contract with ABC company, a dealer, and for the furtherance of business. What is there in contract? To deliver a goods or services. What is like water, soft drink, audio system, projector, catering, flowers, etc. Okay, where at the venue stipulated date, there is one venue is conducting, and for that venue they are supplying some products, and that all whatever they are considering, means like water, soft drink, audio system, for all they are contacted and they are liable to pay amounts. And soft drink supplier want to make upon delivery. ABC company agrees to pay bill raised by soft drink vendor on Grand Bridge and receiving the crates of soft drink. This amount is not billed by the Grand Bridge to ABC Limited. However, it will be added to the value of service provided by the Grand Bridge to ABC. So the amount directly paid by the customer to the another person, because of he is taking that services from one person. So here ABC company is contacted with Bridge Band for their conduct, and they are provided all services. For one service they are provided through third party. That payment was done by the ABC company. So in the invoice, when the invoice is providing by the Grand Bridge, it must include the value of soft drink and pay the GST also, because that value was payable by the Grand Bridge but paid by the ABC company. Next, valuation of supply made by component manufacturer using molds dies owned by the original equipment manufacturer, sent free of cost to him. Here what we will discuss about this. Here there may be some valuations made by for the purpose of OEM manufacturer using molds dies owned by the original equipment manufacturer, sent free of cost. When they are sent free of cost, okay, sent free of cost. As clarified that calculating value of supply made by the component manufacturer using molds dies owned by the original equipment manufacturer. Here component manufacturer is different person and original equipment manufacturer is different person. For component manufacturer using molds and dies which is owned by the original person, and it are sent free of cost to him. The value of such molds and dies shall not be added to the value of supply made by him, because the cost of molds, dies was not to be incurred by the component manufacturer. Here the component manufacturer is not incurred because it was sent by the original person, and that does not merit inclusion in the value of supply. It will not be included. However, if the contract between OEM and component manufacturer was for supply of component made by using the molds and dies belonging to component manufacturer, but the same has been supplied by the OEM to component manufacturer on FOC basis, the amortized cost of such molds and dies shall be added to the value of component. Here what is there? First of all, if you are a furniture business, for example, furniture business, you are designing the tables, and that tables branches is there, no branches, that branches is taken from person who is receiving the buyer. From buyer you have taken the purchase. Next, incidental expenses, section 15 to C. Incidental expenses such as commissions and packing charges, when you are taking that branches from the tree branches from the person, and he has not charged any amount, from that branches you have designed the tables, from that branches you have designed the branches, or you are manufacturing one bus and you have taken from doors or seats from that person, he has not charged any amount, then it will not be included in invoice price. If there is an agreement between both persons, even though they have sent for free of cost, then the value will be amortized. Cost shall be added to the value of component. That is this question. Next, here the clarification will be affirms the view that if an element or constituent of supply which the supplier is responsible to incur provided for the same is actually paid for or made by the recipient. Here actually supplier will incur expenditure for that branches, but recipient is sending that, so the is actually paid made by the recipient. The value of such element or constituent of the supply is to be added to the value of supply being charged by the supplier. If however the supplier is not responsible to incur provided for such element or constituent and the recipient provided for the same, the respective value is not added to the value. Next, incidental expenses, section 15 2C. Section 15 2C. What is the incidental expenses? Here incidental expenses means whatever the expenses, incidental expenses like such as commission, packing charges by the supplier or anything else done by the supplier in relation to supply at the time or before of goods or services must be added to the value. Here commission means this may be paid to agent and recovered from the buyer of the goods or services. This is part of value of supply. Next, packing, if charged by the supplier to the recipient, is similar part of the value of supply. Next, installation and certification charges is another element that may be added to the value if billed to the recipient of supply. For example, if you are installing one AC in your house and some persons came for inspection, for that how they are instructed before you are started, it will be added to your value, invoice value. At the recipient side will also be added, being the amount charged for something done by the supplier in respect of supply at the time of making the supply. So before starting he is testing that. Next, weighing charges, loading charges, designing charges. Incurred before or at the time of supply, it will be added to the value if billed to the recipient of supply. Next, outfreight transit insurance. Next, here outfreight and transit insurance, where the supplier agrees to deliver the goods at the buyer's premises and arranges for transport and insurance. The contract of supply becomes composite supply, the principal supply being the supply of goods. Therefore, outward freight and transit insurance becomes part of the value of the composite supply, and GST is payable thereon at the same rate as applicable to the relevant goods. For example, if you are taking any insurance or freight, for the freight you must charge the GST rate, whatever the GST rate is chargeable for goods which is you are sending, that is there. Next, however, if the contract for supply of an X factory basis where buyer pays the outward freight and insurance, the same will not be included in the value of. Here, if the freight is not agreed before the delivery, means you are selling on your own. You are selling on your own. Then it will not be included in the invoice value. Next, interest, late fee or penalty for delayed payments. Section 15(2)(d). Section 15(2)(d). The value for supplies will include not only the base price but also charges for delay in payment. For example, a supply price at 2000 is made. That is, if you are supplied one thing, the price will be 2000 with a credit period of 1 month for payment. There is credit period will be 1 month, and thereafter interest of 12% is chargeable. Interest of 12% will be chargeable. Next, the payment is received after the lapse of 2 months. So, if credit period will be given was 1 month, the 1 month was already lapsed because the 2 months is lapsed. So, you are charging interest on 2000, 1% per month. So, on 2000, 1% per month means you charge 1% means 20 rupees. 2000 into 1%. 20 rupees will be receiving. So on this 20 rupees, you must pay the GST. But 20 rupees inclusive of GST, we will consider as 20 rupees inclusive of GST. Such interest will be added to the value of, and thus the value of supply will work out to be 2020 rupees, assuming the interest to be exclusive of GST. They are assuming interest will be exclusive of interest. Next, time of supply. When will be the time of supply for such interest, late fee, penalty is the date when such amount is received by the supplier. Further, since such charges are in addition to the value of supply, so what is the tax rate will be taken? Same rate of tax as applicable to the main supply. Whatever the rate applicable to main supply, it will also applicable to the interest or late fee penalty amount also. That is section 15(2)(d). Next, section 15(2)(e). Section 15(2)(e). What is there in section 15(2)(d)(e)? Section 15(2)(e) means this is related to subsidies. What is there in subsidy? Subsidy, if you buy person a supplier, subsidy received by the supplier. If it is received from central government or state government, then the such subsidy must be excluded from the value. Or if you were received from third party, that is NGOs or any other company was given you subsidy, but that subsidy related to directly linked to the price of, if it is a subsidy directly linked to the price, then it will be included. If that subsidy is general subsidy, it will not be included in the value. So the subsidy will be excluded from the value. Next, for example, the selling price of notebook is 50 rupees. Selling price of a notebook will be 50 rupees. For notebooks sold to students in government schools, a company uses its CSR fund to pay the seller 30 rupees. So notebook cost will be 50 rupees. So the government is giving 30 rupees. So the students will pay only 20 rupees notebook. The value of notebook will be 50 rupees, as this is a non-government subsidy. If the same subsidy is paid by the central government or state government, then the value of the notebook will be 20 rupees. If the same subsidy is paid by the central government or state government, the value of the notebook would be 20 rupees. The value of notebook will be 50 rupees. This is non-government subsidy. So non-government subsidy means it must be excluded. Because it is price linked subsidy. If it is provided by the central government or state government, the book value will be 20 rupees only. Next, exclusion of discounts for value. So whenever you are received from subsidies, if it is provided by the central government or state government, it is excluded from the value. If it is general subsidy, will not be excluded from the general subsidy, it will be excluded from the value. If it is directly linked to the value, if it is directly linked to the price, then it must be included. Price is, if it will be directly linked, then it will be added. Next, exclusion from value, that is section 15.3. What is there in section 15.3 of CGST Act 2017? Discounts given. If you have any person, discounts given. Here discounts, there may be three types of discounts were provided. One is cash discount, one is trade discount, one is cash discount, and one is end of season sale discount. So there are three types of discounts: trade discount, cash discount, end of season sale discount. Next, this trade discount will give before or at the time of supply. Okay. Next, cash discount, it will be allowed as deduction. Whenever you see the trade discount, it will be given before or at the time of supply, so it will be deducted. Next, after supply, but the terms are agreed before supply, so there is an agreement, they will provide the discount after, so it will be cash discounts. Allowed as deduction, when allowed as deduction, it will be raised by credit note, means shall be issued. Credit note will be issued because it is after the sale, there is no invoice, credit note will be issued. Next, recipient should reverse proportionate ITC. Whenever he receives the credit note, the recipient must be proportionately amount will be reversed. Proportionately reversed will be reversed. This is discounts. Post discount means, next after discounts, and another discount will be if you are not agreed before supply, then end of season sale discounts not allowed as reduction. So on this, GST payable on value before discounts, on this value will be payable on discounts. This is related to discounts. Here provided, see what is there. There are three types of discounts: discounts at the time of supply, or discounts before sale of supply, or discounts after the sale. If at the time of supply, then shown in the value, yes, discount deducted from value of supply, it will be deducted. If you are not shown in the value, next, discounts included in the value, if you are not providing on the invoices, you must add to the value. Next, this is related to time or before. Next, after supply, in terms of agreement, if there is an agreement between both the seller and the buyer at the time of supply, then can be linked to the invoice, it will be linked to the invoice. If you are not linked, propose and linked, and it must to be proportionate ITC to be reversed by the recipient. Proportionate ITC will be reversed by the recipient. If recipient is reversed, then it will be deducted. If not deducted, then it will be added back. This is discount included in the value of supply. Next, allowability of certain specific types of discounts offered by the supplier has clarified, that is staggered discounts. What is meant by staggered discounts? That is like buy one save more offers. Staggered discounts means buy more save more offers. In case of staggered discounts, rate of discounts increase with increase in purchase value. So for example, one may get 10% discount for purchase above 5,000. If you purchase the 5,000 value, then you will get the 10% discount, like that. If 20% discount for purchases above 10,000 and 30% discount for purchases above 20,000. Such discounts are shown on the invoice itself. You must show in the invoice itself. Next, such discounts are excluded to the determination of value of supply. So it will be excluded from the value of supply. Next, period year-ending discounts or volume discounts. Here they will tell that these discounts are offered by the supplier to their stockist. For example, get additional discounts of 1% if you are purchased 10,000 pieces in a year. Get additional discounts of 2% if you purchase 15,000 pieces in a year. This type of discounts. Such discounts are established in terms of agreement. There is an agreement entered at or before at the time of supply, so not shown in the value. it will not shown in the value, because you must reach that target. No, after the target reached, then only they will provide the discounts. After the target was reached, they will provide credit note. You must reverse that ITC whatever you have taken to that proportionate. Next, secondary discounts. What is the secondary discounts? These are discounts which are not known at the time of supply, or offered after supply is already over. For example, Mr. A supplies 10,000 packets of biscuits to B at 10 rupees. Afterwards, Mrs. A revalued it at 9 rupees per packet. Subsequently, Mr. A issues credit note to B of 1 rupee per ticket, 1 rupee per packet. Such secondary discounts shall not be excluded while determining the value of supply, as such discounts are not known at the time of supply. It will not be deducted. It will not be excluded. If it may be noted, financial or commercial credit can be issued by the supplier even if the conditions mentioned in Class B of subsection 3 of section 15 of the CGST Act are not satisfied. For example, here they provided example. What is there in example of discounts? Deductible from value of supply. When Royal Biscuits Company gives discounts of 30% on the list price to its distributors, so it is showing on invoice. On the list price, it is showing they are providing discounts of 30%. Okay, that for a carton of spice by bisc, in the invoice of the list price is mentioned is 200 as 200, on which discount of 30% is given to arrive at the final price of 140 rupees. The value is 140 now, because 200 into 30%, 60 rupees. 60 rupees must be deducted from 200, then it will value become 140 rupees, as discount is allowed at the time of supply and shown in the value. Next, if it is a post supply discount, the agreement of Raju Electronic Appliance with its dealers is that purchase of rice cookers cover 1000 pieces in the Diwali month will entitle them to discount of 5% per cookers. So what is there is the scheme. If you purchase 1000 pieces, if you purchase over 1000 pieces, then you will get the 5% discount on cookers. Therefore, the quantum of discount can be determined only at the end of Diwali month, because after the Diwali month was completed, then you will calculate. Next, however, since agreement relating to discount was existent at the time of supply and discount can be worked out each invoice, such time will be allowed as deduction for the value of supply, because they are provided before Diwali season. For after Diwali season, they will calculate the discount. So how many persons purchased above 10,000 or above 1,000, they will calculate. Next, Raju Electronic Appliance can issue credit notes for that purpose. Who are eligible or who are exceeded the specified amount of supply, then he must issue the credit notes. Who is receiving the credit note? To the extent of that credit note, they must proportionately reverse the ITC value of along with GST. You must along with GST and claim adjustment of excess tax paid. The dealer reverse the proportionate ITC on the relevant stock to bringing it line with the reduced tax. Next, 16th, Pinky and Blue Private Limited, PBL Private Limited, sold goods to Orange Private Limited, OPL, on 15th January at 50,000 exclusive of taxes and discounts. Okay, and charged 9,000 as IGST. So 50,000 will be the sold goods and they charged 9,000. 18% will be the IGST value. Next, the term of supply stipulated that discount 2% will be given to OPL if it make the payment within 1 month of the supply. OPL avail the input tax credit of 9,000 in the month of January and make the payment of goods on 10th February. PBL issues credit note of 1,180. Because of that they are paid within 1 month, they are provided the credit note of 1,180. Next, 1,000 for value of discount and 180 rupees to proportionate of IGST levied thereon to OPL on 11th February. After receiving the credit note, what the OPL do? OPL must revert the input tax credit of 180 attributable to the discount given by the PBPL. PBPL can reduce the GST liability for the month of February by 180 rupees. OPL would have to pay 57,820. 50,000 plus 9,000. First, whatever the tax. Next, reduce 1,000 minus 180 to PBL on 10th February. Next, example of discount not deductible from supply. Not deductible from supply. If the above example, if the terms of supply did not provide for discount at the rate of 2%, if they are not provided at the time of sale, at the time of supply, for payment within 1 month, but if PBL offers such discount to OPL at the time of payment, once they are negotiating, after negotiating, sir, this cost is too much cost, sir, give some discount, sir, then they are provided discounts. That discount will be not be allowed as deduction from the value. PBL will issue a commercial credit note for only the deduction from the value. PBL will issue commercial credit note for only the value of discount of 1000 rupees. OPL will not reverse any input tax credit, and PBL will also not be able to reduce its GST liability for the common month of February. In this case, OPL would pay 58,000, that is 50,000 plus 9,000 minus 1,000 to PBL on 10th February. Next, a company announced turnover discounts after reviewing dealers' performance during the year. The discount are based on performance slabs and are given as cashback. As these discounts were not known at the time of supply of the goods, they will not be deducted from the value of these goods. So hence the company will not be able to adjust the excess tax paid from tax liability. For example, one illustration will be provided. What is this illustration? For illustration, BW Limited manufacture tobacco products. It has provided the following particulars relating to that sold by it CF Limited. Sold that CF Limited. List price of goods exclusive of all taxes and discounts will be 60,000. Okay, 60,000. Next, excise duty levied was 6,000. Packing charges. Excise duty will be added to the value. It will be added because it is not a CGST, HGST. GST tax only excluded. Next, packing charges. Packing charges will be included as per section 15(2)(c). Excise duty will be added as per section 15(2)(a). Whatever the taxes levied, it will be added before to the GST taxes. And packing charges are also incidental expenses, section 15(2)(c). Next, freight. Here freight was arranged by the BW Limited. That is, who is the person? BW will be the manufacturer. He is the supplier. He is the supplier. Whatever the amount paid or payable by the supplier before the recipient receive the goods on the terms of goods, it will be added to the value. Next, total amount bill to CF before any discounts will be 69,600. 60 plus 6,000 plus 2,000 plus 1,600. 69,600 they are calculated. Okay, they are calculated. Next, discount 2% of value of goods recorded in the invoice. That is, invoice means 2% will be calculated on 60,000. 60,000 into 2%. 60,000 into 2%. I think 1,200. The final amount charged from CF Limited 69,000 less discount 2%. So this 2,000 will be 60,000 into 2%. 1,200 will be deducted from 69,600. 69,600 deducted from 1,200, that is 68,400 will be become the answer. So price of the goods exclusive of taxes and discounts, 60,000 plus excise duty added as per section 15(2)(a). Packing charges as added as per section 15(2)(c). Next, freight 1,600. Both three are added less discount at the rate of 2% on 60,000. Taxable value will be 68,400. Okay, as per section 15(2)(a), any taxes, duties, cess, fee and charged other than CGST, HGST, UTGST, IGST, GST compensation cess, if charged separately by the supplier, should be included in the value of supply. The excise duty should be separately has been added in the value. Next, as per section 15.2c, taxes related to section 15.2a. Next, as per section 15.2c, incidental expenses. Incidental expenses including, here incidental expenses includes commission, packing charges paid by the packing charges by the supplier to the recipient of supply should be included in the value. Thus, packing charges should be added to the value. Next, transport charges is arranged by the supplier. The contract of supply becomes composite supply. Here, the contract becomes composite supply. Whenever the composite supply, it will be treated as the value tax rate will be as an that principal rate. Principal supply rate. Here principal supply will be goods, that is whatever the goods rate is there, it will be added. So being the supply of goods, therefore freight becomes part of value of composite supply. Next, as per section 15.3a, 15.3a says that the value of supply does not include any discounts. 15.3a, discounts does not include, so value of supply does not include any discounts which is given before or at the time of supply if such discount has been duly recorded in the invoice issued in the respect of such supply. Therefore, since in this case discount is known as at the time of supply, so it will be deducted from the value. That is question number 1. Next, question number 2. SCA is a manufacturer of biscuit. Okay, the price of 200 gm packet of biscuits sold by SA Limited is 30 rupees. So 200 packets at the rate of 30 rupees. Okay, it has received subsidy 5 rupees per pack of biscuit sold from NM Limited. He is receiving from subsidy from NM Limited, which is not a government company, Okay, next, from CSR activity, SA Limited supplied 1000 packets. So 1000 packets of biscuits it was supplied at the rate of 25 rupees. Actually, its cost will be 30 rupees, but after discounting, it was sending 25 rupees. Okay. Next, charges to MA Private Limited during the tax period, loading charges will be 1200 has been charged separately from the MA Private Limited. Next, MA Private Limited delayed the payment of consideration and thus paid 5000 as interest. So no separate amount of GST is paid on interest by MA Limited. In the next tax period, assume the GST rate will be 18%. For the interest delay, they are collected delayed amount, that is section 15.2d will be considered and it will be added to the value. Next, here first of all 1000 packets at the rate of 25 rupees, where 25 rupees is charging. This is after subsidy, but this subsidy is not providing government or central government. If the central government or state government provided, it will be excluded. So here that person is not a central government and state government, so it will be added back. So subsidy received from NM Limited 5 rupees for packet will be added. Next, loading charges will be added back 1200. Interest for delay in payment of consideration, it will be added as per section 15.2d. interest will be added back, delayed. Value of taxable supply will be 35,437. that is as per section 15.2e. 15.2e is related to subsidies. If the subsidy is directly linked to the price, excluding subsidies provided by the central government and state government should be included in the value. So here they are provided non-government, so it will be added back to the value. If that subsidy is provided central government and state government, it should be excluded, no issue. That is 15.2e. Next, as per section 15.2c, whatever the 15c expense, incidental expenses, including commission and packing charges by the supplier to the recipient of supply, and any amount charged for anything done by the supplier in respect of supply of goods or services, or both at the time of or before delivery of goods or supply of services, should be included in the value. If it is in at or before the supply. Next, that is related to section 15.2c. Next, as per section 15.2e, 15.2e means like interest or late fee or penalty for delayed payment. Of any consideration for any any supply should be included in the value. However, as per section 12.6, the time value of to the extent it relate to an addition the value of supply by way of interest is the date when such interest is received. Time of supply will be at the when the amount is received. In the given case, since GST has not been paid separately on the interest, it will be when the interest amount or delayed payment penalty, whatever amount collected, it will be treated as inclusive of GST, whether if the question is specifically not explained. So in the given case, since GST has not been paid separately on the interest, the same is treated as inclusive of GST. Thus, value has been computed by making the back calculation interest divided by 100% plus tax rate into 100. The time of supply in relation to addition in value by way of such interest will fall in the next tax period on the date when the same is received. Next, section 15.4. What is there in section 15.4? Here it will be discussed about that. Suppliers where cannot be determined as per section 15.1 notified. If you are not able to determine as per section 15.1, then we will go for section 15.4. Okay. Section 15.3 will be that is related to discounts, and section 15.2 related to that is section 15.1 and 15.2 related to incidental expenses and such expenditure related to course of business and agents and supplier and account of decent, that all are 15.1 and 2. And now we are discussing section 15.4 and 5. 15.4 and 5. What is there in 4 and 5? If in the case of section 15.4, laid down that where the subsection 1 is not applicable if the transaction is with related party. If it is with related party and price is not sole consideration, where out of that if they are related person or there is no sole consideration, then the goods and the value will be determined in the manner as prescribed by the such means. So we will go with rules. If they are not related to there is no sole consideration, or they are persons are not they are not unrelated person, then we will go with rules. We will determine as per rules. Next, supplies of specified category of goods or services. Here section 15.5 says that certain notified supplies also the value will be determined in the manner as stipulated in the rules. Certain specified goods there must be calculated as per rules only. Notified categories. What is there in notified? They are like this: the services of purchase or sale of foreign currency, including money changing. There in that rules they will provide directly to the calculation. Means they are provide some percentage on gross value, or they provide some other mention. So service of booking air ticket by air travel agents, they will provide on gross domestic or international, and domestic 5%, international 10%, that type of. Next, life insurance services. The life insurance services may be investment linked or not linked, risk covered, buying and selling of second hand goods, vouchers, token, coupons or stamps. These all notified goods will be calculated based on rules. Voucher taking services provided without consideration between distinct persons under GST law. If there is a distinct persons means the person is registered in 2 states. This person is known as distinct persons. Next, supply in case of lottery, betting, gambling and horse racing. Next, section 15. What is there in section 15 in simply? Value of supply under section 15. Whether price is the sole consideration for supply. If it is a sole consideration is exists, where the supplier and recipient is related, then we will go for supplier was unrelated person, then notified as per section 15.5. Assessable value is equal to transaction value. If the transaction value is not a sole consideration or related party, then we will go for rules. We will calculate it as per rules. Okay. Rules for valuation. What is there? These rules. almost there is 5 to 6 rules. 5 to 6 rules we will calculate. 10, I think 10 rules is there for calculation of this person. What is their rule? First, rule 27 to 35 rules. There are totally 27 to 35 rules. Rule 27 to 29 supplemented by rule 30 to 31. That is, we will go with rule 27, rule 28, rule 29. If rule 27 is not provided properly, then we will go with rule 30. That is, value of supplies involving non-monetary consideration or related parties. Related parties, section 27, 28, 29 will be discussed. For example, 27 will be related parties, 28 will be agents, or 29 will be distinct person, like that. If 27 is not calculated, if 27 information is not there, then we will go with rule 30. What is there in rule 30? They will tell. If there is rule 30 is not possible, rule 30 is not possible. Rule 30 is there, that like that cost on cost we will take 110%. 110%. If rule 30 is also not possible, then go with rule 31. What is there in rule 31? It is proper officer will calculate. Application should be made by the taxpayer. Next, rule 31A and 32. Rule 31A and 32. There is values on specified supplies. What we are discussed above some specified supplies is there, no? That is domestic, international, insurance, like that. Rule 33. Valuation of supplies made as a pure agent of recipient. Then rule 33 will be applicable. Rule 34 and 35. Other rules relevant for valuation. This is total rules. After section 15 completed, we will come with rules, valuation rules. Okay, first one, what is there in rule 27? Rule 27, it is where value of supply of goods or services where consideration is not wholly in money. Because means there may be value in barter system, barter transaction, exchange transactions, or permanent transfer or disposal of business assets where input tax credit has been availed on such assets. Here they may involve any money or some money is involved, only some money is involved. Then permanent transfer has made or disposal of business assets where input tax credit has been availed on such assets. Then rule 27 will be considered. Rule 27 when will we consider rule 27? When consideration not wholly in money, then rule 27 will be applicable. This method provides in rule 27 in order to sequence. We will go with sequence form. One come later in the sequence. Is applicable only in the previous method or not applicable? Previous methods is not applicable, then come for rule 27. That is section 15 is not applicable, come with rules. Rule 27, they provide one sequence. You must go with this sequence only. You will not skip one sequence and will not step for other sequence. Next, first what we will see, open market value will be considered. Open market value, whatever the open market value is there, you will consider that the price. Next, if the open market price is not there for our product, then go for if open market value is not on, then go for total consideration in money, whatever the money is you are receiving, plus amount equal to the consideration not in money, whatever amount you are receiving plus whatever not receiving, but that the cost is different, that amount will be calculated. First we see the open market value. If open market value is not exist, then total consideration in money plus amount equal to the consideration, whatever you are giving some product and giving some amount. For example, if you are buying one mobile, you are giving old mobile and paying some money. So whatever amount you are paying, that amount plus whatever you are giving one mobile, amount equal to that consideration, that amount will be considered. Next, if that also not there, next, value of supplies of like and quality, we will go with like and quality. Next, if there is no like and quality product, next we will go with consideration in money, whatever consideration in money plus money value of non consideration computed as per rule 30 or Rule 31. Rule 30 or Rule 31. We will see that. Rule 30 means it is 10% of 110% of cost production or acquisition of product. If you are a trader, it will be treated as goods. If you are a service provider, for services 110% will be cost will be calculated. That is this sequence. What is there in sequence? First we will see the open market value. If the open market value not exist, go with total consideration in money, money in consideration plus money value of non-monetary consideration. If money consideration is not there, then go for like and quality. Then like and quality is not possible, then go for rules 30 and 31. 30 rule will be cost plus 10%. Rule 30 is not possible. Rule 31 will be assessing officer, that GST officer will find out if you made the application. Even though if you are not interested to go with Rule 30, you can skip that Rule 30. But above 3 is there, no, that is open market value, total market consideration and value of supplies like in quality. First these 3 must be C here. Next, what is mean by open market value? What is seen by open market value? Open market value means full value of money excluding taxes under GST law payable by the person to obtain such value and at such time when supply being valued is made, provided such supply is between unrelated person and price for the sole consideration for such supply. It is known as open market value. Here there must be a price, sole consideration and unrelated person. It will be excluded all GSTs. Next, what is supply of like and quality? What is meant by like and quality? Like and quality means any other supply made under similar circumstances. Here there will be similar circumstances. In open market, that is same product, but in like and quality there may be similar circumstances which is in same or close or substantially resembles, means today or yesterday or day before yesterday, but in open market value there must be today only. Next, in respect of character, quality, quantity, functionality, reputation for the time being valued, it will maybe some minor changes, it will be acceptable. For example, X Limited offers a new mobile phone worth 20,000 to Y in exchange of old mobile phone and cash payment of 16,000. So new mobile phone cost was 20,000 and exchanging old mobile phone and cash payment is 60,000. Here that is second point, total consideration in money plus amount equal to the consideration in not in money, that will be calculated. Here 16,000 is paying plus that old mobile phone cost will be calculated. Next, exchange of value of old mobile phone, lower of price of new phone. The known market value of the new phone, without exchange of old phone, that is open market value will be 20,000, which is taxable value in this case. If you tell that, sir, I am paying only 16,000, consideration 16,000, they will not accept it. In consideration plus you are giving one non-monetary, that is old phone. Next, laptop is manufactured and supplied for 40,000. Okay. Further, a printer valued for 4,000 is also received in the barter. So manufactured 40, supplied 40,000 laptop and printer valued 4,000 is also received in barter system. Market value of the laptop is not known. If you don't know the market value, then taxable value will be 44,000. Next, here 4 steps. What is the 4 steps? First one will be open market value. First we see the open market value. If open market value is not there, money consideration plus money value of non-monetary consideration. If this also not there, next go for value of supply like and quality. If this also not provided, then go for money consideration plus money value of non-consideration, that is as per Rule 30, computed on the basis of 110% of cost of supply or by other reasonable means. Next, Rule 28. Rule 27 is applicable where price is not sole consideration. Next, Rule 28 is applicable when there is a supply between distinct and related persons. If the transactions was in between of related parties, then we will see that here, First to see the open market value. For example, first they are provided example. Who is the related party? Who is the distincted person? For example, related person means Mr. A and Mr. B are legally recognized partners in the partnership firm A, B and Co. And Mr. A and Mr. B are related persons. The transaction of supply between Mr. A and Mr. B in the course or furtherance of business is treated as supply, even if the made without consideration. It will be treated as supply when there is a furtherance or course of business. Then a person who has obtained or is required to obtain more than one registration, whether in one state or one union territory or more than one state or union territory, shall in respect of each such registration be treated as a distinct person for the purpose of this section. This act, where a person who has obtained or is required to obtain registration in a state or union territory in respect of an establishment has made establishment on another state. So where the persons are registered in more than one state, that all registration is treated as distinct persons. Next, examples of supplies valued as per Rule 28, that is interstate stock transfer of goods between different registration of an entity under same PAN, that is branch transfers, or interstate stock transfers of goods between different registration of an entity under same PAN. Next, import of service by a company from holding subsidiary companies in the course or furtherance of business. Okay, what is the sequence to be applied? Yes, here also same sequence will be applied sequentially. You will not skip one sequence and meeting for other step. So first we see the open market value. After that, value of supplies of like and quality. First to see the open market value. If the open market value is not there, next go for value of supplies of like and quality. Then if like and quality is not available, then go for value as per rule 30 or 31. What is the 30 or 31? 30 means that is 10% will be added to your cost. That is rule 30. Rule 31 will be the assessing officer. That is based on valuation is discussed by the assessing officer will be calculated. Next, here there is one option. In rule 27 there is no option. Here there is one option. Who is the person dealing in goods? If the goods are intended to be supplied, as such by the recipient, then value is equal to 90% of value charged for the supply of goods of like Indian quality by the recipient to the unrelated person. It is only for the person who is dealing in goods. That is 90% of the price at which the recipient supplies like Indian quality of unrelated buyer on the same day. It will be considered. Next, here recipient should not process these goods but should have been sold as such. If you purchase from one person and selling from same without changing any, even though that price is not there, then it will be treated as 90% of value price charged for supply of goods if you have a linked like in quality. Next, it is important to note that as per valuation rule 32.7, the valuation taxable services provided by notified class or classes of provided without any consideration between distinct person is nil if ITC is available. Next, rule 32 discussed later. Here example provided. What is there in example? ABC Private Limited, a registered supplier, is a manufacturer of taxable goods. The company factory is located in Noida, Uttar Pradesh, and depot in Gurugram, Haryana. So registered supplier is that manufacturer of taxable goods. The company factory is located in Noida, Uttar Pradesh. Depot is Gurugram, Haryana. Gurugram depot is eligible for full ITC. Noida factory agrees to supply goods worth 1 lakh to a customer of Gurugram depot on its behalf. Next, Noida factory ship the goods directly to the customer. Here this is directly shipping without doing any process. So they are dealing in goods, though there are an option of 90% of value can be considered directly to the customers in Gurugram and build the Gurugram depot. Noida has the option to building Gurugram depot at 90% of 1 lakh, that is 90,000. It can also building the Gurugram depot on actual cost, as Gurugram depot is eligible for full ITC. Full ITC will be eligible. In the same scenario, if the goods are replaced by the services, the option of valuing the services at the rate of 90% of value charged by the recipient to unrelated customer will not be available. However, since the recipient is eligible for full ITC, the value of supply services declared in the value invoice shall be taken as open market value. So here it will also treated as open market value. Naturally, if you open market value if not provided, then 110% will be taken as per rule 30. Here recipient is not eligible for 100% ITC, then open market value will be there is option of this person, that is 90% of recipient supplies of like and quality portfolio. Next, rule 29. What is there in rule 29? It is related to principal and agent transactions. Principals and agent transactions between this person. Who is here? We will see two options only. In first case we have 4 options, and second case we have 3 options. In third case we have only 2 options. In first case was rule 27, price is not sole consideration. Then we have seen that 4 options, that is open market value, money consideration plus money value of non-monetary consideration, like in quality, and cost plus 10%. In second case, that is related to distinct or related persons, we have seen the 3 cases, that is open market value or like in quality or cost plus 10%. Now principal agent transactions we will see only 2, that is market value, open market value or 90% value, or cost plus 10%, that is rule 30. Here 90% price charged for the supply of goods of like and quality by recipient to his unrelated person. This rule is applicable only for valuation of supply of goods between principal and supply. Here one example. ABC Limited supplies goods to its agent, and agent is supplying goods of like and quality in subsequent supplies at price 1000 rupees per unit on the day of supply. ABC also supplies goods to unrelated customers at the rate of 950 rupees. So the ABC company, the principal, is supplying for unrelated person 950 rupees per unit on the day of supply. The value of supply made by the ABC Limited to agent shall be 950 rupees per unit, or where it can exercise the option of value shall be 90% of 1000 rupees, 900 units. So if the open market they are selling for another person 950 rupees, but we can take in agent's transaction, they will be 900 rupees per unit. Next, value if open market value is not there, then go for rule 30. Rule 30 is explained that cost plus 10% market value, or rule 30 is not available, go for rule 30 is not available, go for rule 31, where value of supply determined by using reasonable means consistent with the principle and general provisions of GST law, that is best judgment method. Next, rule 29. What is there in rule 29? Here rule 29, example for the rule 29. Okay, supplies of goods by principal to his agents. When agent supply the goods on behalf of the principal. Supplies of goods by an agent to his principal when the agent receives the goods on behalf of principal. First we will see the 2. First one, we have option for second one, that is if there is an open market value, we can take the open market value, or we have another option, that is 90% of the price charged for the goods of like and quality by the recipient of to his unrelated person. Whatever is for the is providing for unrelated person chargeable into 90%, whichever option you can take. Or second option will be, go if you are not provided open market value, go for rule 30, that is 110% of cost of supply. If rule 30 is not available, go for rule 31, that is best judgment method, value using reasonable means. Next, Rule 30. What is there in Rule 30? Value of supply of goods or services. Value of goods or services, that is adding value of 10% margin, that is 110%. It will be its value will be 110% of cost of production, manufacturer, acquisition of such goods or cost of provisions. If it is a manufacturer, acquisition goods or cost of provisions in case of services. Next, Rule 31. What is there in Rule 31? If above provisions is not applicable, that is supply of goods, Rule 27, 28, 29, 30, 31, suppliers of 27, 28, 29, 30, 31. If we are not able to find out in up to Rule 30, then we will go for Rule 31. Rule 31 is example. Here Rule 31, the value will be determined by the GST officer. A cosmetic company buys its product from subcontractor who supplies testers of each product to be placed in retail outlet free of charge. These are different size for the product that is sold. Okay, the company and subcontractor are related person. Where there is a related person, here there is not unrelated person, the price will not be sole consideration. The subcontractor does not have details of cost of acquisition. So as per Rule 30 is not available, and Rule 27 to 29 are also not available because they are related persons. Next, as none of the method is allowable to Rule 27 to 30, then we will go for determined by using reasonable means consistent with the principles and general provisions of section 15. Whatever the section 15 we are discussed, for section 15 we are discussed section 15.1 will be the transaction value. There supplier made to related person, or supplier where the price is not sole consideration, where supply is notified by the person, then it will be determined by the rules. Here 15 and rules will be calculated. And possible method may be pro rata reduction of the price based on the difference in size for the product and that is sold. Here taxable supply made between the related person and between distinct person. Then whether the service is service provided by the notified service provider between distinct person without any consideration and ITC is available, then it will be value will be nil. If not, then whether the supplier is of goods intended to sold as such by the recipient, yes, then go for 90% case or open market value. If not, go for whether the recipient is eligible for ITC. Then if ITC is available, then go for open market value. ITC is not available, then is the open market value available or not? If the open market value is available or not. Open market value is not available, then go for like in quality. If like in quality is not available, then go for 10% of cost of production will be computed. If are not provided for 10% of cost is not maintained, then go for value to be computed as per reasonable means, that is best judgment method. Here GST officer will be calculated. Next, Rule 31A. What is there in Rule 31A? Rule 31A, in case of lottery, betting, gambling and horse racing cases. Here what they will say na, supply of lottery organized by the central government or authorized state government. Supply of lottery organized by state government or authorized by state government. Then higher of 2 will be considered. That is value of ticket, face value of ticket or price as notified by the organized state. It will be considered as value. That is whatever the face value of ticket or price as notified by the organizing state, who is organizing that state, into whichever is higher will be considered into 100 divided by 128, because in that face value we are treating inclusive of GST. Next, if such as an actionable claim in the form of chance to win in betting, gambling or horse racing, then 100% of face value of bet or amount paid to the totalizer but it will not be included the commission amount will not be included here. Only the amount the face value will be considered. Here the totalizer means who is pooling the tickets and giving that person who is playing the game, that is known as totalizer. Next, for example, the government of state runs a lottery where face value of lottery ticket will be 250 rupees and price notified by the state government in the official gazette is 240 rupees. So 240 or 250, whichever is higher will be considered. That is lower of ticket, the value of ticket will be 195.313. Next, the government of state runs a lottery where face value of lottery ticket is 250 rupees and price notified by the state government in the official gazette 260 rupees. Then 260 into 100 by 128 or 250 into 100 by 128. Whichever is higher will be considered 203 rupees. Here the value whatever provided, it will be treated as inclusive of GST. Next, rule 32. What is there in rule 32? This is related to determination of value in respect of certain suppliers. They provide certain suppliers. For their suppliers, they will provide directly to some percentage. Based on that percentage, we will calculate the value. Rule 32 provides what the rule 32 provides a valuation method for 5 specific suppliers. They provide 5 specific supplies, and rule 32 overrides the other rules of valuation. Thus, the suppliers prescribed in this rule need not be valued by sequentially followed rule in 27 to 31. So we will not consider 27 and 31 when we are going for rule 32. In the rule 32, they provide directly percentages and the values. Based on that percentages, we will calculate it. Next, we will not see the open market value or price consideration like in quality. We will not see in this case rule 32 cases. Rule 32 is provided 5 specific cases. Next, the valuation method prescribed under rule 32 are optional. Is this rule 32 is an optional case? The supplier can use them if the so decide. He can also opt the values as applied in accordance with the other valuation rules. If you want to go with the other valuation rules, you can go. There is no issue. Okay, what is the special valuation methods for 5 suppliers? What are the 5 suppliers? First of all, price or sale of foreign currency, including money changing. So if you are a money changer, money changer means if you are taking 1000 rupees note and providing 100 rupees of 100 rupees, when giving 100 rupees, you are charging 10 rupees as a commission. The 10 rupees will be taxable as GST. You are changing money changer. Okay. Next, here they will provide like up to 1 lakh some amount and up to 10 lakh one amount. That type of amounts will be provided. Next, booking of tickets for air travel by air travel agents. If you are a air travel agent, then they will provide some percentage like domestic fare value 5% or international booking will be 10%. That type of. Next, life insurance business means they provide like that. If you are a investment is intimated, based on that intimation, if you are intimated, then gross amount will be deducted that amount. If you are not intimated, it will be treated as same other, that is it will be 25% or 25% for first year premium or 12.5% for subsequent year. So like that they provide some percentages. Next, value of supply of second hand goods. If you are in a second hand goods, here also they provide some rules. Next, value of redeemable vouchers, stamps, coupons, tokens. If you are in a second hand goods, they provide like that 5% will be deducted from quarter. It is treated as depreciation. And notified services like value of redeemable vouchers, coupons, stuff, it will be treated as based on redeemable against the value will be treated as value. So first, what is their currency changing? This deals with 32.2 sub-rule 2, that is 32 rule 32.2. What is there in rule 32? First, we will see this case 1, transaction where one of the currency exchange is in Indian. So here first we will see the when in both currencies one currency is Indian currency, one currency is Indian currency is involved, then we will take that bid rate and bid rate minus when Indian currency is involved, our RBI rate will be there. So buying or selling rate minus that is different. Value of supply is difference between buying or selling rate. Difference between buying or selling rate minus RBI reference rate. RBI reference rate will be considered into multiple by total units. Whatever the unit is there of currencies will be considered. So ask rate or bid rate, buying rate or selling rate minus RBI reference rate into total units. If you get any negative value, will not be considered, because it not be considered means the value will be taken. Signs will be no important here, because they tell that only the value is difference of between. So difference, if you get the negative sense, negative value, even though negative value, we will consider value, we will not give importance to signs here. Next, however, if RBI reference rate for currency is not available, if RBI rate is not provided, then gross amount into gross amount into 1% will be considered. Next, when both currencies exchanged involve foreign currencies. For example, they are provided one example. On 10th May, Mr. Doshi converted USD $100 into 7,400 at the rate of 74 rupees. They are provided Indian currency. Okay. This is 100 units. That is, total units will be 100 units through Eastern money changes. RBI reference rate on 10th May for US dollars will be 75 rupees. So actual rate is 75. We are considered 74 rupees. So 75 minus 74 into total units will be 100 rupees. That is 100 rupees. So GST leviable on 100 rupees. If RBI rate is not provided, that is 75 rupees is not provided, then 74,000 into 1% will be the value of supply, and 74 rupees you will liable to pay GST. Next, transaction value, whether neither of currency exchanged in Indian rupee is not involved, then directly go for 1%. 1% of two amounts of the other person charging would be received by confirming. So convert both the currencies into using RBI reference rates. Convert both the reference rate at the rate of 1%. Whichever is lower will be considered. The value of supply is 1% of lesser of the two amounts of the person charging the money would be have received by converting the RBI rate. So if you are not in same currencies, both will be converted in Indian currencies, and 1% will be taken, and whichever is lesser, this will be calculated. This will be treated as value, and on that value we will be charged for GST. Next, for example, USA dollar 9,000 are converted into UK $9,000 were converted into UK. Okay, RBI reference rate at the time of USA is 74. US dollar is euros will be 98 rupees. Dollars will be 74. Euros will be 98. So both will be converted. Indian rupees first. On that whichever is lower, will be calculated at the rate of 1%. That will be value of supply. So UK dollar converted into Indian rupees 9,000 into 74 rupees. UK dollars converted into Indian rupees 4,500 into 98. So value of supply of service is equal to 4,41,000. Whichever is lower will be 4,41,000 into 1%. That is 4,410. 4,410 will be considered. Next, method 2. Though they are provided. Method 2. or you can take this also, you can take this also. That is method 2 will be up to 1 lakh, up to 1 lakh 1% of gross amount of currency exchange, or 250, whichever is higher will be considered. Up to 1 lakh money exchanging, you are exchanging 1 lakh rupee money exchanging, 1 lakh into 1%, that is 1 lakh into 1%, I think so, 1000 or 250, whichever is higher, that is 1000 will be taken and 1000 GST will be leviable. Next, exceeding 1 lakh and up to 10 lakhs. If you are dealing more than 1 lakh, that is you are exchanged 8 lakh rupees, if you exchange 8 lakh rupees, then up to 1 lakh 1000 and remaining 7 lakhs 0.5%, 0.5%. Next, exceeding 10 lakhs, on up to 10 lakhs it will be 5500, exceeding the 10 lakhs it will be 0.1% or 60,000, whichever is lower will be considered. In first case, whichever is higher will be considered, and last, whichever is lower will be considered. They provided one illustration. In illustration, X Private Limited, a money changer, has exchanged US dollars, that is 10,000 rupees to Indian rupees at the rate of 74 rupees per US dollar. X Private Limited want to value of supply in accordance with Rule 32(2)(b). So 32(2)(b) means this case. If Rule 32(2)(1) means that above case, reference RBI reference rate differences, that will be considered. So whatever the amount they are providing, 10,000 is exchanging. 10,000 is exchanging means 10,000 into 74. 10,000 into 74 means it become 7 lakh 40. Up to 1 lakh it will be rate of 1000 rupees it will come, and above 1 lakh, that is 6 lakh 40. 6 lakh 40 into 0.5%, it will be considered 0.5%. 6 lakh 40 into 0.5%, 3,200. Value of supply will be 4,200, and 2,000 you will be liable to pay GST. So as per Rule 32(2)(b) of CGST rules, the value in relation to supply of foreign currency, this is 32(2)(b) rule, including money exchanging, is deemed to be 1% of gross amount. You will take the gross amount of currency exchanged after the exchange for the amount up to 1 lakh, subject to maximum of 250 rupees, or 1000 and 0.5% of gross amount of currency exchanged for an amount exceeding 1 lakh and up to 10 lakhs. If it is exceeded 10 lakhs, then 0.1% or 60,000, whichever is lower will be considered. So as per this we are calculated. Next, sub rule 3, that is Rule 32(3) will be. It is related to air travel agent services. If air travel agent services in dealing in domestic bookings, then base fare value into 5% will be considered. If he is dealing in international booking, 10% of basic fare value will be treated. So basic fare is equal to air fare on which the commission is normally paid to the air travel agent by airline. Okay. Next, here UB and Sons is an air travel agency. Compute the value of supply of services made by the firm during the month with the help of following particulars furnished by it. What is the information? Domestic booking will be basic fare 1,900 and other charges 9,510, taxes 4,990, total value of ticket 1,15,400. Okay. International booking 3,16,880, 20,930 will be other expenses, and taxes will be 15,670, and total value will be 3,53,480. So for the purpose of Rule 32, the sub rule will be 2, I think. Rule 32(3), Rule 32(3). For the purpose of Rule 32(3), we will consider basic fare. On basic fare, if it is a domestic, then it will be treated into 5%. If it is the international booking, it will be 10%. So 1,900,000 into 5%, that is 5,045 rupees. 3,16,880 into 10%, that is 31,680. Total value of supply will be 36,733. Note, as per rule 32(3) of CGST rule, the value of supply of services in relation to booking of tickets for air travel by air provided by an air travel agent is 5% of basic fare in case of domestic booking and 10% of basic fare in case of international booking. Next, rule 32(4), sub-rule 4, that is rule 32(4) is discussed about life insurance business. Life insurance business. Here life insurance business, there are 4 items. Policy of with dual benefit of risk covered and investment, that is taxable value is equal to gross premium charged less amount allocated for investment savings if such allocation is intimated to the policy holder at the time of investment. For example, you are collected 500 rupees, gross amount will be 500. Out of that 200 will be investment linked. If you are intimated, sir, we are collecting 200 rupees for the purpose of investment, then this amount will be deducted, 500 minus 200. If you are not intimated to that person, then it will be treated as other cases. 25% of premium charged for the policy for the first year and 12.5% will be charged. Next, single premium annuity policy. If it is a single premium policy annuity, then it will be treated as taxable value is equal to 10% of single premium, 10% of single premium charged from the policy holder where allocation for investment savings is not intimated to the policy holder. Next, in any other cases, taxable value is equal to 25% of premium charged for the policy holder in the first year and 12.5% of premium charged for subsequent year if you are not intimated to the investment, like that other cases. Next, policy with only risk cover. If it is a risk cover policy, then entire premium will be treated as taxable value. Next, illustration. What is there in illustration 1? That is Arihant Life Insurance Company Limited has charged gross premium of 180 lakhs. He is charging 180 lakhs as a premium for policy holder with respect to life insurance policy in 2021, out of which 100 lakhs have been allocated for investment on behalf of the policy holder. So 100 lakhs will be investment plan. Okay, if the amount allocated for investment has been intimated by the company to policy holder, then at the time of supply only they are intimated, so then value will be 180 minus 100 will be considered, that is 80 rupees will be taxable value. Next, if the amount allocated for investment has not been intimated by the ALLC to policy holder, then it will be treated as any other case, that is it will be treated as percentages based on first year and subsequent years. For first year 25% of premium will be considered and subsequent years 12.5 will be considered. Next, if the gross premium charged by ALCR from policy holder is only towards risk cover, if it is a risk cover policy, total amount will be taxable value. Next, ALCR has started its operation in the year 2021. So 2021, thus because now we are in 2021, so we are in first year, it will be considered as 25% of premium will be considered. Next, that the entire policy premium of 1,80,000 is the premium of the first year only, so we will consider 25% of premium. Okay, rule 32(4). What the rule 32(4)? It will divided into 4 categories. First, if you are charged for investment policy, if you are intimated that policy, if you are intimated, deducted from gross value. If you are not intimated, then 20 on that policy 25% will be taken for first year and remaining subsequent year 12.5%. So they are telling that only for gross premium reduced by amount if you are intimated. If you are not intimated, 25% of premium of first year and 12.5% of premium in subsequent year. However, where the entire premium paid by the policy holder, only towards risk, then gross amount will be taken. So as per provisions, First question answer. Amount allocated for investment. Amount allocated for investment holder at the time of supply. Then value of supply is equal to. Then value of supply is equal to 180 minus 100. That is gross amount deducted by the value. Gross amount deducted by the investment value amount. 80 lakhs. 80 lakhs will be value of supply. Value of supply. Okay. Next, if the amount, if the not intimated, they are not intimated, then it is a first year policy. So 180 lakhs into 25% will be considered. That is 45 lakhs will be the taxable value. 45 lakhs will be the considered. If the total amount will be the towards risk. Total amount will be towards risk. Then it will be fully will be considered. It will be fully will be considered. So total 180 lakhs will be considered as value. It will be taxable. Next, special provisions relating to determination of value of second-hand goods by dealer second-hand goods margin scheme. This is rule 32.5 where buying and selling of second-hand goods, then value is equal to selling price minus purchase price. That is margin scheme. This is margin scheme. Here ITC should not be availed on purchase. Here ITC will not be availed on purchase. In case of repossession, if there is any repossession, here the purpose of margin scheme is to avoid double taxation. What is margin scheme? That is selling price minus purchase price. That is margin scheme. As goods having once borne the incidence of tax and re-enter the value. Here they will provide. If you are going for margin scheme, then ITC should not be availed on purchases. When ITC is not available, then margin scheme is allowable. That is value is equal to selling price minus purchase price. Selling price less than purchase price. Ignore negative signs. Ignore negative values. Negative values will be ignored. Next, CGST and second hand goods received from unregistered. If you are received from unregistered person, then the supply will be exempted. Next, when ITC availed, then normal valuation as per other applicable provisions. What is there in other applicable provisions? Maybe 5% will be reduced as a depreciation. They may be tell in normal valuation. For example number 29. A company X Limited. Okay, a company X Limited which deals in buying and selling of second-hand car, purchased a second-hand Maruti Alto car March 2015. Makes original price will be 5 lakhs. For he has purchased for 3 lakhs. Its original price will be 5 lakhs. It was purchased from unregistered person 3 lakhs. So here and the same is sold for small minor. It was considered as some minor. Then it was sold at 3 lakh 50 rupees. The supply of the car to the company for 3 lakhs shall be exempted. Up to 3 lakhs will be exempted because the supply was from unregistered person, and the supply of the same by the company to its customers for 3.5 lakhs shall be taxable. So when the supply of the car of the company for 3 lakhs, then it shall be exempted. Sell the car for 3 lakhs. The company does not avail ITC. Company also does not avail ITC. The value of GST purpose shall be 50,000. 3 lakhs from unregistered person. It incurs 30,000 of minor fabrication and sell the car for 3 lakhs 50. So he incur 30,000 as expenditure. Next, the company does not avail any ITC. The value of GST purpose shall be 50,000 rupees. That is 3 lakhs will be from unregistered person. It will not be exempted. Only additional 50,000 will be GST purpose. Next, person who purchases second-hand goods after payment of tax to the supplier of such goods are governed by these valuation rules only when they do not avail ITC on such inputs supply. If ITC is availed, then such supply is governed by normal GST valuation provisions. Then rules will not be applicable. Next, margin scheme is available only for supply of used goods by a person dealing in buying and selling of second-hand goods. So margin scheme is available for only the person who is dealing in second-hand. Next, old and used motor vehicles, old and used motor vehicles, old and used motor vehicles. Different rates of taxes, different rate of taxes has been prescribed for old and used vehicles depending upon the size and engine capacity of such motor vehicles and value of supply. In such cases, when ITC is not available, is value that represents margin of supply on supply of such goods determined as follow. It is the case when in case of registered person who has claimed depreciation under section 32 of Income Tax Act 1961 on the said goods, then value is equal to consideration received minus depreciation value on the date of supply. Next, consideration is less than depreciated value, then ignore the negative value. In any other case, value of selling price minus purchasing price, that is here selling price less than or equal to purchasing price, then ignore the negative signs. When ITC is available, then go for normal computation as per applicable provisions. Purchase value of supply of goods repossessed from defaulting borrower. Here we are, if you are any repossessed, then the original purchase price minus original purchase price minus 5% of every quarter or part thereof from the date of purchase till the date of disposal will be calculated for the repossessed asset. For example, if the defaulting borrower is unregistered person, then we will calculate like this. That is, purchase price in the hands of such borrower reduced by 5% for each quarter or part thereof between the date of purchase and date of disposal by the person making such repossession. If defaulting borrower is registered person, registered person, then the repossessing lender agency will discharge the GST at the supply value without any reduction from actual or notional purchase value. Then special provisions relating to determination of value of redeemable vouchers or coupons or stamps or tokens. Here money value of supplies redeemable against such vouchers or coupon will be considered. That is, value of token, voucher, coupon, stamps other than postage stamps which is redeemable against supply of goods or services is equal to the money value of goods. Whatever the amount is providing on that voucher, it will be treated as money consideration on such token. If 1500 worth of meal coupon are supplied by the taxable person, then value of supply of such coupon under GST law will be also 1500 rupees. Next, special provisions relating to determination of value of services provided by notified service provider between distinct person. That is rule 32(7). That is, when there is a notified person between distinct person without consideration, then if ITC available on purchase, then it will be nil. Note, here services are not notified for these purposes. Notices are not provided. If ITC is available on that purchase, it will be nil. Taxable value will be nil. No such services was notified as for. Next, Rule 33. What is Rule 33? Rule 33 will be value of supply in case of pure agent. This is deal with Rule 33. Okay. Rule 33, pure agent, when there is a pure agent person. If pure agent is independent concept related. For example, we will see the one example, we will get the concept. A, an importer. Here importer includes custom broker, and B, customs broker. Importer and custom broker includes agent. Okay. What he done? A approaches B for clearance of work in respect of import consignment. When Rule 33, supply as per pure agent, then cost incurred by the supplier as per pure agent of recipient shall be excluded from the value. As per Rule 33, what is discussed? Whatever the cost incurred by the supplier as a pure agent of recipient shall be excluded from the value. For example, what is there? A importer and B is a custom broker. A approaches B for customs clearance work in respect of an import consignment. The clearance of import consignment and delivery of consignment to A would also require for taking services of a transporter. So A also authorized B. A also authorized to B to incur expenditure on this behalf for procuring services of transporter and agrees to reimburse B for the transportation of cost actually used. So one person came and said that other person, you can incur whatever the expenditure for my work, I will reimburse that expenditure. So here that person is treated as pure agent. So here B is providing custom broker services for that person incurring some expenditure, and he will charge commission on that. Whatever commission he will charge, and that commission only taxable. Whatever the amount reimbursed, it will not be considered. Means Mr. B is a providing custom broker services to A, which would be on principal to principal basis. The ancillary services of transportation is procured by B on behalf of A as a pure agent, and expenses incurred by B on transportation should not form part of value of customs broker of services. Whatever E charged, B charged, only that value will be considered for value of taxable supply. Next, in this case the value of transport service was 10,000. If customer broker charges any amount more than 10,000, then he will not consider as pure agent. He must tell that whatever incur, then only he will treat as pure agent. If we are adding his margin, then he is not tell that pure agent of transport, and value of transport services will be included in the value of his custom brokers. Next, relevant for pure agent under GST. Expenditure or cost incurred as pure agent excluded from value of supply. If you are incurred as a pure agent, then that value will be reduced from the value of supply. Next, expenditure and cost incurred by the supplier as a pure agent of the recipient of supply of service has to be excluded from the value of supply. This is concept of pure agent. Okay. For example 32. Corporate services firm A is engaged to handle the legal work pertaining to the incorporation of company B. Okay, company incorporation is doing by the one person. Other services other than its service fee, A also received. Means he is providing ROC fillings. On ROC filing, his service fee is there, and ROC expenditure is there. That is challan is paying for MGT forms or any forms he is paying. For answered forms, he must pay some fee. There, registration fee and approval fee for the name of the company paid to the registrar of the company. That who is the person providing the service, he is paid on behalf of this person, and the fee charged by the registrar of the company for registration and approval of the name are compulsory levied on B. Here, A merely acting as a pure agent in payment of these fees. That is, registration fee, approval fee is only the person is acting as a pure agent. Therefore, A recover of such expenses is a disbursement and not form part of value. Only the person who is consulting the charges he will charge, that will be fee. So, for example, if you are a consultant person, you are filing income tax return. On income tax return, you must pay the income tax amount, and after the filing is completed, you must give that IT return and IT income tax payment challan to the customer, and from customer you will charge your fee plus whatever you are paid on income tax for income tax challan. To the extent of that income tax amount, you are a pure agent. So your value of supply will not be considered that tax amount, because only the value you charging to the customer, it will be the value of supply. Next, example number 33. Port fees, port charges, custom duty, dock fees, dock duty, transport charges, etc. paid by the customer broker on behalf of owner of goods. Expenses incurred by the C&F agent and reimbursed by the principal such as freight, go down charges. It will all detailed as pure agent services. Next, suppose a customer broker issues an invoice for reimbursement of few expenses for consideration towards agency services rendered to an importer. Agency income 10,000, traveling expenses, that is total expenses 15,000, custom duty 15,000, 55,000, document dues 5,000. In the above situation, agency income and travel expenses should be added for determining the value of supply. That is, agency income and traveling expenses will be added, and to the extent of custom duty and dock duty, he is a pure agent. It will not be added to the value of supply. This is related to that. Next, another one, taxability of airport levies collected by the airlines as pure agent. That is one concept of PDF. UDF PSF concept. Here what will happen? The airlines, here 3% will be there. Here 3% will be there. One person will be air operator, and one person will be passenger, and one person will be airlines. Airlines provide space to airport operators, and airport operators work on that, and they will collect the amount from passengers. On airports, on air operator, only to the extent of there is one fee, that is user development fee, passenger development fee. It is for airlines to passengers, but this amount was collected by the airlines as agents, because they are close to the customers. To the extent of that amount, that is PSF and UDF amount, they will be treated as pure agents. They will not liable to pay tax amount. But provided the airline satisfy the conditions as pure agent. If the pure agent condition is not satisfied, what if you are added there any margin for that PSF UDF, then they will liable to pay GST on UDF and PSF. Okay. Next, that is related to that. Next, Rule 34 related to rate of exchange currency other than Indian rupee for determination of value. If it is a goods, use the determining rate notified by the CBEC. CBEC rate will be considered. If it is related to services, then rate determined as per gap. Prevalent on the date of time of supply. Next, Rule 35. Value of supply inclusive of integrated taxes, CGST, HGST, whatever the value will be inclusive of taxes, where value of supply is inclusive of taxes, that is CGST, HGST, UGST, IGST. The tax amount is calculated by making the back calculation. What is the back calculation? Value of inclusive of GST, total value will be considered into GST rate divided by 100 will be calculated. For example, Rule 36. If the value inclusive of tax will be 100 rupees, then applicable GST rate is 18%. Then it will be considered as 100 into 18 divided by 118. That is 15.25 was included in that value. So, total value of supply chapter will be completed. Test your knowledge questions will be provided in next video.